buys commercial.
What I like to do is read the CRE Daily. Not a plug, not sponsored by them, but they do have a lot of great content. And when I was looking at the office market, looks like investors are back in action, picking up properties. And I've seen it somewhat in our local market, but wanted to kind of dive into this article and then correlate it to what we're doing here in Indianapolis. So let's get into it. So right now, they're saying the volume of office building sales rose by 20% in 2024, signaling a market recovery after years of sluggish activity. Investors want high-quality offices with debt or vacant space, hoping to add value via renovations and leasing, and even converting properties to residential. Well, I haven't seen too much of the residential. There's only one property that's a standout here in Indianapolis, 220 Meridian by Keystone. That is a great property. You can't really get any better than that when it comes to Class A apartments. This article goes in some really good detail of the overall office market, and now let's correlate it to here in my market, Indianapolis. Part one of this is our overall market overview. In the Indianapolis office market, the past 2 years, there's been some fluctuations in sales activity of some of the buildings in our CBD market, as well as the other markets here throughout the city. When we look at, one of the trends that came up is cap rates. So cap rates, generally speaking, for the properties that we can see here in our data were at 9.8% in 2023 to 2024, whereas 2024 to 2025, today for January 30th, we're at 8.8. So you can see there has been some rising demand from other investors with this property type. It's really not surprising considering some of the more smaller properties that are in this market, which we'll get into here in a second with those statistics. So when you talk about the average sales price, we're talking about 1.5 to 2.6. It rose from that 2023 to 2024 period to now. You're talking about close to $1.1 million increase in price. And then really the average months to sale has actually dropped from 8.2 to 7.6 months. So you can see it's a little more liquid market and being more efficient. So part two is the property trends. So what are we seeing here? In the prior period, 2023 to 2024, we're seeing, the average age is actually fairly old. We're talking about 1970s grade. You think of garden style, 1-story, 2-story office buildings. And then also people are looking for more updated properties. So you can see this is, in the other trend with some a little bit newer, late 1970s, early 80s. That's what they're looking for. And that's just really in the actual data. When we talk about the average property size that people are targeting, it was 14,400. Now it is closer to 20,000, 19,200 square feet for the average square footage of these properties. Just like the CRE Daily article was stating that people want to get some type of value add play here. It's the whole point of buying something that is maybe in a great location. Any other property type, it's the same. But with office, if you can deliver a better quality product, it makes sense that, the square footage is rising. Maybe it's better floor plates, better how you're going to position those suites, etc. So that's for part two of the property trends. So when it comes to the insights from other industry reports, such as CBRE, Marcus and Millichap, Colliers, etc., we wanted to look at several factors here. Of course, the hybrid work model is still here, and I still think it's here to stay in some aspects, but you already, ad nauseum already know that most larger institutions are going to have a mandatory return to work mandate, but again, that's going to take over time. But you can see that in the data again. So we're talking about Class A office space. This is what people want. I have plenty of high-end medical office or financial services users, and they want to be in certain areas of town, and we just can't find this flight to quality Class A office space in some of these areas of town. So, you're seeing vacancy rates, marginally improve when we talk about the suburban areas, especially when you talk about 10 basis points rather to 22.8% in quarter Q4 of 2024. And interest rates are still not going to drop. Of course, yesterday we stayed at our current interest rates right now. So I don't believe that's going to marginally make any improvements to activity. I just think this is the new norm right now on where sales activity is going to be. And the last part of this is really, what is the forecast for 2025? What does that really hold for us? Again, I still think it's a continuing trend of flight to quality. If people are going to be in offices, regardless of what they do, regardless of their industry, they're going to want to be in a Class A office space. And when I say Class A office space, a true Class A building that was built, let's say, in the last 10 to 15 years, or highly renovated, or just being in a more nicer building. They've actually put money into those common areas. There are real amenities around this particular location. I think that's really going to make sense when people are doing all their leasing activity. And this is what I also recommend to my clients when we're looking at properties if they want to be in a better building. If you're looking to stay ahead of these trends in Indianapolis, whether it's office, whether it's retail, whether it's industrial, etc., we would love for you to give this video a like, a share, and subscribe to our channel. Thanks again for watching, and I'll see you in the next one.